Hi, good morning everyone. Thanks for joining us. I can see some bang on 11 o'clock, so we'll just give people a few more seconds to join as people get logged into the right places. I hope you're all having a nice Friday morning. I hope it's been a good week. I hope it's nice weather where you are. I'm in York and it's grey, and for the first time this morning I thought I'd have to turn the lights on while I was working, so it certainly feels like we're moving into September weather. And with us today we've got people in London, Scotland and Norwich, so we can get a full British weather review if we need it. Now it's 11:01, so I'll get started, and then as people join, they can join as we're going through the introduction. So thanks for joining us to talk about the shrinking home collected credit market and the customers who've been left behind by some of the recent market exits. For those who don't know me, my name's Lauren Peel. I'm Head of Markets, Consumer Insights and Product Design at Fair4All Finance. I will do some housekeeping points. This session is being recorded and will be available publicly afterwards. So when you're doing the Q&A, please don't share any sensitive information or in the session chat, because this will be available publicly too. We will have some dedicated time for questions and answers at the end, but if you do have specific questions as we go through, feel free to put them in the question box and we'll try and pick them up the best that we can. So I joined Fair4All at the start of May, and 1 week later, Provident announced that they would stop lending to new customers, shortly followed by Perfect Home, the rent-to-own provider. And while Provident certainly aren't the first to exit this market, and likely won't be the last, they are the biggest and the most high profile, with hundreds of thousands of customers now left underserved. And I know that everyone on this call knows that customers have few choices when they need to access credit. And one of my biggest concerns that I know you'll share is around awareness, and when these customers have a need for credit, when they're used to going to one place, where do they turn to in that moment of need? But it can also be challenging to serve these customers, whether that's because they're hard to reach or because their credit needs are hard to serve in a financially sustainable way. In this session today, we'll be learning more about home collected credit customers, who they are and what's important to them, with Neil Alexander, our Markets and Customer Insights Manager. And we're also going to be joined by Sam Bettis, who's Customer Experience Director at Crow, an integrated marketing agency. Who'll be sharing some insights from digital listening, learning more about what these customers are talking about online when it comes to their credit needs, as well as some practical tips for you to take away. Then we'll have some things for you to think about, some questions, some recommendations that you might want to think about for your own businesses and when considering this customer segment. Some of you have sent some questions in advance, which we tried to build into the content, but as I said, there'll be some time for questions at the end. But for now, I'm going to pass over to the very capable hands of Neil Alexander to talk more about the home collected credit market and its customers. Take it away, Neil.
Thank you, Lauren. Hello, everybody. So I'm Neil Alexander, Markets and Consumer Insights Manager at Fair4All. Hope you're all well. Excuse me. Thanks for sharing part of your Friday morning with us. Weather update. So I'm in Dunoon on the Cowal Peninsula, and yesterday I answered somebody on Twitter who was bemoaning the current British summer, and I have to say it's not been like that in the west of Scotland. Since records began, I believe Glasgow in the west of Scotland has had the best summer of all time. So you're missing out if you're not in Argyll. Anyway, thank you for joining us. I'm pretty certain that everybody on the call is familiar with the name Provident or Provi, the terms home credit, doorstep lending. You'll be familiar with those. And over the next 15-20 minutes, I'm going to walk through some of the issues around Provident's decision to leave the home collected credit market and the impact that might have on remaining customers. So if you can go to the next slide, please, Lauren, that'd be helpful. Thank you. We're going to look at the specifics on who those remaining customers are or where, what their needs are, and why there is still a demand for credit amongst low-income households. It's To start with, it's worth saying, I think that Provident were saddened to leave the market. Maybe a strange thing to say, and not just because up till 4 years ago they were making about £100 million a year from the home credit market. It's culturally embedded with them. It's been with them. It's in their DNA since 1880. They've been involved in home credit for a very long time. And until very recently, as I said, they made a decent profit from home collected credit. It's embedded in their Bradford base, and let's not forget that 2,000 people, more than 2,000 people, will be made redundant likely as a result of this, their decision. Provident Personal Credit is just one part of their business. It's been loss-making for the last 4 years, cumulatively just shy of £250 million they've lost in the last 4 years in that division. But other parts of the Provident Financial Group have made money. Vanquis Bank and Moneybarn Car Finance have made money. So their decision to close wasn't the biggest surprise. It's been trialled. Wasn't a great surprise. They have 311,000 customers when the announcement was made. A lot less now. Some of them were Satsuma customers. They were not all home collected credit customers. That's a lot less than a decade earlier. If you went back 10 years, they had 6 times that. They had 1.8 million customers. If you went back 5 years, they had about 1 million customers, just shy of 1 million customers. So this has been something that has been coming for some time. Most of you will know that there is a scheme of arrangement in place, £50 million to compensate customers who believe they have been badly served and had a claim against poor lending. That pot of 50 million, some believe, is very small in relation to how much they will need to pay out, and some people suggest it could be as low as 5 pence in the pound. Time will tell. Can we have the next slide, please? In more general terms, it's appropriate, I think, to ask whether the closure of Provident's home collected credit arm will lead to the demise of the remaining home credit sector. After all, and Lauren trailed some of this, after all, we've seen the demise of rent to own, Bright House, Perfect Home. We've seen guarantors all but exit the market. We've seen a near 100% reduction in high cost short-term credit. So it's likely that Provident will reassert themselves as a mid-cost, near-prime lender, not subprime. And indeed, since they made the announcement that they were closing, their share price has done okay. There was a week where they had a blip after the 10th of May, but it's now up about 42% since the 10th of May. So the market is buying into Provident's kind of changes. There are a range of factors, I think, that led to Provident's decision. Some of these factors are across the board. Some of these factors will affect many of the lenders on this call. Some will be specific to home credit companies, and others. One certainly was self-inflicted in Provident's case. It is likely that the claims management companies that took about 13,000, in excess of 13,000 complaints to the Financial Ombudsman Service in 2020 against Provident, it's likely that they might now turn their attention to the next biggest home credit lender, Morses Club. There's a big book there. There's 150,000 people. Uphold rates against Morses Club are running over 60% at the Financial Ombudsman Service in the last year or so. So it's possible that the claims management companies will go there. In fact, I don't particularly see any reason why they wouldn't go there. And remember, each claim, win or lose, each claim costs the company £750. So 10,000 claims, £7.5 million before you've made any compensation claim. The other issues across the board have been tighter regulations, greater scrutiny. The outcome of a court case last year, Kerrigan versus Elevate, which was all about the unfair relationships between lender and borrower. Lots of issues around relending, which impact all lenders on this call. Everyone wants sticky customers. Everyone wants a safer borrower second time round. And of course, there's the issue of ongoing reputational damage. Provident had one other massive determinant, and that was their own self-inflicted wound back in 2016, when they moved from self-employed agents to customer engagement managers, and that had fairly disastrous consequences. They posted a loss in that year of £106 million, and they had an impairment on their revenues of 64%. So people weren't repaying. Their share price also crashed at that time. Home credit is what all lenders describe as a mature market. There's no boom time coming anytime soon for home credit, is there? There's solid numbers of people who are looking to have that type of relationship, but as we move increasingly to digital, it's an old-fashioned way of doing business, and Provident knew that. So if we take the next slide, we'll see that Provident have themselves marked our card about the changes that they are making in recent years. So they have been reducing their lending, as I say, and their customer base for over a decade. You can see on the kind of thermometer-like images on the left-hand side, they still represented about 40% of a diminishing market, but that market has been diminishing for some time. On the right-hand side of the page, the one that's tagged market opportunity for PFG, that tells us where they're headed. They are seeing new opportunities in the successful divisions: credit cards, vehicle finance, and personal loans to near prime customers, significantly near prime, not subprime. There is always going to be some kind of reputational damage with near prime customers as well as subprime, but the sector doesn't catch the eye as much of the public or the regulator as much as subprime does. If we go to the next slide, please. So these two charts, and bear with me on them, you don't need to see the axis, really, you just need to see the patterns. These two charts show the demise over a period of years. On the left, that's Provident's consumer credit division numbers. That's what they are, reducing year on year down to just over 300,000 in the last year. On the right-hand side, that's the high-cost short-term credit market. That's where Satsuma were. That's where traditionally, Wonga, the poster boy of high-cost short-term credit, were as well. And you can see that the pandemic has had a massive impact on that. Yes, absolutely. But if you look, you can see that the exit in high-cost short-term credit isn't just all in the last year as a result of the pandemic. That kind of started around 2018. And that high point in 2018 was nothing like the high point in the high-cost short-term credit market of about 5 years earlier. So you add Bright House and Perfect Home to home credit and to high-cost short-term credit, and you've got a trifecta of product types that are exiting the market or reducing their scope in the market, with consequences for lower income households. Next slide, please. There's not a graph I've ever met that I don't like, fair to say. So what this shows you is that actually Provident are no longer the largest home collected credit company in the market. They've now been overtaken because their loan book is clearly diminishing by Morses Club. Morses Club just announced a matter of days ago that they are about to relist as U Money, not as Morses Club, U being the letter U. So the Morses Club are already now the largest home collected credit company in the UK. And they and the company who are third largest, Non-Standard Finance, who 2 days ago lost their chief executive who resigned, which I'll come on to later on, they are bullish, even though the market in Dubai, they are bullish about the opportunity that presents as a result of Provident leaving. So that's what Morses Club have said about the market size. They see opportunity. If we go to the next slide, this is also what Morses Club had to say. It's a smaller market, but there are richer pickings. And if they have the capital to lend and the agents to lend it, they believe that they can make some inroads into some of that market that's been left behind by Provident. If we go to the next slide. Is that the next slide? Yeah, there we go. So this one also is what Non-Standard Finance had to say. They've said a lot of stuff about the state of the market and the historic patterns that they are seeing. So Non-Standard Finance know the patterns of recession, of high unemployment, and the needs of credit, and that kind of coexisting need for credit. Their issue at Non-Standard Finance is trying to raise £80 million from investors to then be in a position to lend. That may have had something to do with the resignation very quickly on Tuesday of their current chief executive. But they all believe that there is some pickings to be made in that market. Next slide, please. Thanks, Lauren. Again, you don't need to know the detail of this slide. It's very small. I'm as short-sighted as anybody, so I'm always bemoaning slides that I can't read. But the pattern is what you need to look at here. The slide, the darker line on the left-hand side, the darker line headed on a downward trajectory, is Provident's shift from customers who were categorised as C, D, and E from 2013. The green line, one that is has an upward trajectory, over the same period is their internal scoring of AB customers. These are internal scores, but they broadly break down as lower risk and higher risk. The point here that I'm trying to make is that Provident were leaving the very poorest, most vulnerable customer as a planned move over many years. Fewer, better, leaner, that's where they were headed, with a resultant improvement, has to be said, in impairment as a result. And, you know, they actually, around 2016, were hitting what they probably thought was a sweet spot around this market. They had about 1 million customers, they had a 600 million loan book, and they had an impairment at that time of about 20-21%, which is lower than the norm. And then, of course, they had their botched IT change, and everything changed. If we go to the next slide, this is what the internal analysis. This is provided also by Provident. This comes from many publications that Provident have made over the years. So this is Provident's internal articulation of customer needs. It's useful, I think, for all community lenders to look at that and see what they're saying. Access and acceptance, big issues of affordability. The access and acceptance issues, you know, customers need a good chance of you saying yes. Affordability, money was sold in £100 bundles. Can you afford £3.50 a week? If you can afford £3.50 a week, you can get 100 quid. You know, if you can afford £7 a week, you can get 200 quid. That type of calculation. So it was based on cost, not price. You were paying for it. It was all embedded. Empathy and flexibility. People who were friendly, if not your friend, were the people who lent you money. You got flexibility. You didn't have to make 5 payments out of 5. Ask your bank for some flexibility. It doesn't come easily. So 3 payments out of 5. You know, if they came to the door and your son or daughter answered the door and they asked if your mum was in, the answer was no, my mum's not in. When will your mum be in? I don't know, mum, when will you be in? 3 payments out of 5 was a pretty regular kind of payment pattern. Ease and convenience. People like the option of the personal touch and turning up at your door. If we go to the next slide. So this is taken from a report last year by PwC for the FCA. As you can find, all of this stuff is available. You can find all this online, and we'll obviously make the slides available. But this report was taken from PwC last year for the FCA. And you can see here on the left-hand side, I'll just pick out 1 or 2 bits for you. The purpose of loans in home credit, loans for special occasions, special items, as many know, Christmas to Christmas, summer to summer. These were the reasons. If we go to the next slide, it's a bit clearer in terms of who that customer is. Spelled out a bit more here. It's women on low incomes, in rented accommodation, needing a small sum of cash, delivered in a way that they feel comfortable with. That's the customer. The average loan size, PwC said it was about 770. I think it's lower than that now, and I think it's lower because Provident, who still dominated the market, had shifted quite markedly from 52-week loans to about 39-week loans. So it shifted the amount that people wanted. So I think this average size, we're looking at around the £500 mark. If we go to the next one, again, it's spelled out a bit more here. Those issues of flexibility, of reliability, of certainty, and of a relationship. These are the key aspects of that demographic. Flexibility, in my view, is probably the most important factor in home collected credit. The ability to miss payment. Reliability and certainty. Reliability not just in the sense that there's a physical presence, but reliability in that will you be here next year? If you are asking people to go to an alternative, the question is, will you be here for me next year? I know they had traditionally always been here for me. Morse's Club as well. Morse's Club 130 years old. So culturally embedded and reliable. Although I accept if the issue is about reliability, it reduces anxiety, but it creates other anxieties. The relationship was vital. It was embedded in communities, mother to daughter, that type of thing. So if we go to the next slide, which I think may well be the last or nearly the last, we're trying to get to some kind of conclusion on this. So it's possible that Providence exit may be followed by the rest of the market. Who knows? We will find out within the next 6 months probably. That's a distinct possibility that happens. But despite the exit, there is still a significant demand for credit amongst lower income households. Almost all research would tell you that. There is a market for omni-channel lending, different channels, and Morse's are already showing us that that's what they are trying to do. They are trying to maintain the relationship, maintain a sort of relationship with a customer whilst keeping it digital as much as they can. So this is the kind of sweet spot that people are now looking for. All of my contact details are on the Fair4All Finance website. We'll make these slides available to you. Thanks for listening.
Perfect. Thanks so much, Neil. I think lots to take in a short space of time there. Well, the recording and the slides will be available afterwards. I think some things that I'm thinking about is that the customers who are underserved and excluded following Providence exit, often some of them might have been excluded for a lot longer due to their shifts in lending. Yes, there's still some big players in the market, but there's obviously some clear opportunities to serve these customers, and I'd encourage providers on this call to be thinking about how these customers differ or are similar to your existing customer base, and be thinking about that as we go through the next piece and into the recommendations and Q&A at the end. So with that in mind, I'm going to pass over to Sam from Crow. Sam, if you can give us a bit of a background on the digital listening piece and then into the insights, that would be great. Thanks so much for joining us.
Yeah, thanks. Yeah, so we're from Crow. We're an integrated agency. We kind of specialise in the customer experience, and that means that fundamentally everything that we do for our clients is based on how we listen to the customer and kind of asking that question of how can we help? How can we hear about what they need and perhaps make this moment a bit better? And I think what we were originally asked to do here was look specifically around the moment of the Provident closure to see what we could uncover and see what we could learn to help you guys progress with what you want to do next. And we did learn a few things from doing that, but it was, however, a very short period of time. We saw some behaviours around people perhaps looking immediately for what they should do next, like what now? But beyond that, we started to look a little bit at a broader conversation. And the way that we do our digital listening for context is mapped around a model which we use to help us understand the 360 view of the customer and help us frame those questions around how we can help, and therefore start to map out journeys where we can not only build awareness, but in really meaningful ways. So this model is called Say, Think, Do, Hear. And all it really does is merges a selection of different research methodologies to understand a customer. So when we talk about saying, we talk about digital listening. What are people saying out loud for the world to hear? This may be on platforms such as social or in forums. And the thing about this is that it's public. Everybody can hear what you're saying when you're broadcasting it through something like Twitter. So people behave very differently here, but it's very worthwhile listening to. And then we move into thinking, and this is like your primary research kind of typical methodology. So it's asking people how they feel about their own behaviour. That can be done through surveys or interviews. And it's all about self-reflection. So while this is really valuable, I kind of take it with a bit of salt in that it's how people perceive their own behaviours. It's how their ego is kind of influencing them. Then we move into do, and this is the private moment, this is the behavioural moment. So when people are on a mission, when they're finally trying to solve the problem, what are they doing? And if you look at how people behave in search compared to what they say out loud, that's where you can learn quite a lot. And then finally, the bit around the edge is what they're hearing. And we capture this through digital listening too. And really that's about what's influencing the customer. That can be the news, that can be the weather, that can be the environment. But all of these things which the potential customer hear makes them feel a certain way. For the purpose of what we've done today, we've really focused within the say and the hear area, because through digital listening, that's what we're really capturing. So what are people saying out loud and what can we learn from that? And what are our audiences hearing? What are the things that are influencing them? And off the back of that, what we've tried to do is help map up some ways to help you grow. What do we need to do to meet those customer needs? And that breaks down into 5 real stages. So how do we map out those needs? How do we then start to be on the right channels, in the right place, at the right time? From there, where are our safe spaces? Because we're talking about a potentially vulnerable audience, and we need to make sure we're creating safe spaces for them. We need to make sure that whether they're saying this out loud for the world to hear or they're searching for that, we're helping them feel comfortable and supported. Can we potentially improve service? Improving service is a valuable way to get really powerful reach. Actually, if you think about the volume of mentions that we captured, which were simply customer complaints about the service that they were experiencing, well, I think anywhere between like 7,000 mentions could generate 9 million reach. So if those 7,000 mentions are people complaining about customer service, that could be 9 million bad reach. But if those mentions become people talking about how great your service is, how supported they feel, that could become good reach, and that's really powerful. And then finally, how do we grow our share of voice? What can we do once we've got all of the planets aligned to kind of grow our share of voice and make ourselves visible and helpful for all of the right reasons? So like I say, we created this piece of research through digital listening, and quite a lot went into it, because when we first started our journey, we started looking at the Provident closure specifically. Then we dipped into conversation around people's personal experiences. We actually dipped into conversation around how people were speaking about their family and friends' experiences with these lenders. We've tried to look into different brands and the sentiment around those, and we looked at the big influencing conversation. So we can share a full methodology of what went into this off the back of this, but what we're going to present to you today is, I think, 2 of the most important elements of this research. That's the macro conversation, and that is the influencing conversation. That's a really huge conversation of things which may be kind of shaping the way that our customers feel. And then you've got the personal conversation, and the personal conversation is people speaking about their own experiences with these lenders. It's a much smaller conversation, but there's a lot to learn here. And when we speak about lenders, there's a few example terms at the bottom there, but we're speaking about doorstep lenders, short-term loans, payday loans, credit unions, credit building loans. We're talking about some of the specific brands have been plugged in here too, CDFI, all of these things together, different spelling mistakes of the words, just to pick out how people are mentioning them. So if we start with the macro conversation, this is the big picture that's potentially influencing and driving how our customers may feel and behave. And I think that this screenshot here really summarises it all. I need urgent advice, no lectures, please. No lectures is the biggest signifier for how our customers may be feeling right now, and it's something we can really learn from. When I looked at forum discussion around what should I do now, it has dramatically declined over the years. A few years back, people would say, where could I get access to finance quickly so that I can fix my car? People had a little bit more comfort in having these conversations and asking for advice. But really within the last year, there was only 1 or 2 mentions across all of the forums that we scraped. That is because when you see threads like this in forums online, people do get lectured, they get judged, they get jumped on. And this is why our customers need safe spaces, because the influencing conversation, which I can walk you through, isn't always good. And we need to protect the perception of our customer. We need to protect them by creating these safe spaces, and we need to find the right way to communicate them to make them feel supported. There was 30,000 mentions across 1 year, and at large, that conversation was negative. And at large, that conversation was not customers. It was news outlets. It was people with loud voices and opinions. People associating payday loans specifically with those rock bottom moments. The news was speaking about the difficulties with the providers themselves, and there was this big ongoing discussion around legislation. It's really dominated by news and negativity at large. And within that, there's some top conversation drivers, which may be about regulation. So when people speak about regulation, they may be speaking about the fact that there should be more regulation, there should be more clarity. Even if you think about lenders such as perhaps a Klarna entering this conversation now because of the way that they make a different type of finance really accessible, there is a call for regulation and definition at large. And I think transparency around this could be really, really powerful. The next biggest one is complaints management, and complaints management, like I say, if 7,000 mentions can generate 9 million reach, then how can we help people complain less? And that doesn't mean that we really have to invest in bigger customer service activity. It can simply mean that we're clearer in our comms. We have an email program, we have FAQ on our website that can really help. And there's credit unions and communities. So credit unions have been really kind of making a push in the last year, particularly in Ireland and Northern Ireland. You can see that there's a large share of voice. And this is not from the customer, this is from the credit unions themselves making an effort to talk about the good they're doing. And we can kind of hope that that will rub off on the customer. Rock bottom was something really big that came through. And again, this is from the opinion sharers. So people were claiming that these products are associated with rock bottom. And again, this is where we need to protect the perception of our customer. Our customer may be getting the loan for very different reasons. And the fact that the internet is sometimes out there judging them simply isn't very nice. We need to look after these people. Car finance is a thing that fights directly against rock bottom, and it's a big one. And I guess when I talk about car finance, I'm not necessarily talking about finance to buy a car. I may be speaking about the fact that somebody's car has just broke down and they need access to money quickly to help them get it fixed, because that's their vehicle to get to work. These people may not have loads of savings stacked up. So when people are speaking about wanting access to these products, it's for reasons like this. It's for a genuine time of need where they might need help to keep them going. And then there's advice. And what I will say is that advice offered is a lot bigger than advice being asked for at the moment, which is quite interesting. There's a lot of opinion sharing, and that's again something that we should look at protecting the customer from. The biggest contributors, as you could expect, are the news, and that's because they have the highest reach. And these are obviously some of the bigger national outlets, but even at a smaller local press level, it is the news that really dominate the conversation. And then the themes within that, themes such as editorial education. So the press are trying to educate people around questions you should ask before applying to a product. A really big story in the last year was Provident. It absolutely dominated quite a lot of the press. So that's quite interesting to see the ongoing commentary around kind of the free spikes around the Provident closure. Payment holidays, so that may be something exclusive to COVID, but what it does remind us of is everything happening in the world around us is constantly kind of steering and shaping what the press wants to talk about. And the press will always invite contributions, and we are businesses built with experts across lending. So if the press are after contributions, if they're after advice, then that could be a way that we can really help. As long as we've got our ear on the ground and we're listening, we can be a part of that. And then there's types of lending. So I think we can all see that the conversation, the market is just expanding and expanding, and there's more different terminologies than ever kind of moving around. So there is a big conversation around all of these different types of lending and what they could be. So what can we do about this? And I think for me, looking at the share of the conversation that the press are absolutely dominating, and action for us is how can we focus on press to lead the conversation for a longer term change? What can we do to start to offer some advice to the press? Are there opportunities for us to build on the educational message? I think we caveat that with the fact that the press is a fantastic awareness vehicle and it's got a high readership, but it may not necessarily always be the most trusted source of advice. What you tend to see is if the press start pushing a message, maybe about a year later, the customer tends to catch on. So it is a longer term strategy for us to look at, but it's something that would be really invaluable, because if we want to start spreading the right messages into what is negative conversation, we need to think about how we can use press. But alongside that, we need to make sure we're mapping out that customer journey and really understanding where we can be useful, because one thing we can observe through digital listening is where advice is recommended or sought versus where advice is offered are very, very different in terms of how people speak. So as much as we are using press for awareness, we should not see that as our only mechanism to really helping the customer. And there is a need to do research around how we can be that right thing in the right place at the right time. We need to think about the different channel experiences that we're appearing in. So if we're algorithm powered in newsfeed, we're surprising someone. Does somebody want to be surprised with a message from their lender? If we're in a preference powered newsfeed, so an email inbox, for example, we just need to make sure that we stand out amongst all of those personal messages. And in a search powered feed, so perhaps where somebody is deliberately searching for affordable finance, for example, then we need to make sure that we are the most relevant answer to that question. So the key thing here is mapping out our channels and then making sure we really understand the context of those channels. So moving on into the personal discussion, and this is where people may be using terms such as I or me or my to signify that it is a personal experience of one of these products. It is a significantly smaller conversation. So we're talking about 1,000-ish mentions over the last year, compared to 30,000 people sharing their opinion, 30,000 people making a lot of noise about accessible finance. You've got this tiny conversation, and that's largely on Twitter, which really is a place for sharing opinion and shouting out loud. But there is a small amount of conversation on forums, and that is people seeking advice in a safe space. And while they're not asking the question, help, can I get access to finance quickly, because that's where the judgment comes, they may be asking a question around, will it affect my mortgage in the future? How can I get debt transfer loans? How can I run a claim for a negative experience that I've had? So there's all of these different types of advice that are being asked for, and if we listen to them, we could create content around these moments. An action that can help us really build on the types of help that customers are asking for is perhaps using something like Google Trends to understand the questions that people are asking. So if you run a search for bad credit loans, for instance, on Google Trends, what you can see is what people are searching for in their private time. So how are people trying to understand what's happening? And then we can write content which responds to those questions and be really helpful. If we give focus to search, we can be that safe space, because like I say, the forum conversation is declining. It's still there. It's there in a way that's different, but it's about how do we complement the conversations that are happening on forums with truly helpful search content. We need to think about the questions that people are asking, and then we need to answer them in a way that makes true sense. If you look across the board, quite often web content is not structured in a way that will really help answer the customer's question. And then on Twitter, as I say, there's a lot of opinion coming through. It's opinion where people are saying that they've had a bad experience, they won't be convinced to have this again. But it's also opinion that highlights pain points, it highlights moments of fear. So people may speak about the fact that they got a letter from Provident, and rather than simply trusting it, they thought it was a scam. They're worried about this. So if we listen, we can hear quite a lot. We can hear people talking about things that frighten them, but also moments within the user experience where they may not be having the best time. The fact that the phones are not being answered quick enough, the fact that they don't know what buttons to click on, the fact that an email did not tell them when their next payment date was. All of these things are being spoken about online, and they're kind of step one to helping us understand the customer's pain points and how we can help. But really, the step that we need to take from here is make sure that user testing and user experience is fundamental to underpinning everything we do. If you look at the types of things being spoken about on reviews, you can see that people are specifically speaking about instances of good or bad user experience. And if we listen to this, we can understand how easy it could be in some ways to turn a negative conversation into a positive one. If we answer the question before they ask it, that is so powerful. So what we need to start to understand is our customer in a more in-depth way than ever. We need to understand the diversity of our customer and what they might be expecting and how we can build a user experience around that. And before we even go into testing, we need to make sure that inclusive design is running through everything that we do, because everybody's reading age is different. Everybody's perception on a scenario is different. The empathy that we speak with is different for everyone, and we need to start with inclusive design and then progress into user testing to make sure that we are crafting experiences that are for everyone. And empathy often falls flat when we limit ourselves to our teams, and that's what we must always remember. We need to invite a larger pool of people, because often your designer, often the person planning the comms, might have a higher user ability than the rest of the nation, and that's because it's their job. Their job is grounded in design, so of course, like from a user point of view, they may have higher understanding, they'll have higher financial literacy. So we need to make sure that we understand a bigger pool of people in our teams when we do this. So those are just a few headlines from the overall digital listening, but what we really need to think about is how do we help our customers? Because when we help our customers, when we support them, that's how we can unlock bigger reach, not only through generating a positive conversation from the customer, but also putting ourselves on a real trajectory towards success. All of these things that we do through search, for instance, when we answer the question, we're also getting a lot of visibility off the back of that, and that's really powerful. So if we go back to those 5 points at the start, and I really think that perhaps this could be a list of how we could prioritise what to do next. What do we do now that really helps the customer? And that starts with mapping the customer needs. We could gather content themes from search, we can interview customers, we can talk to the customer service teams about what happens frequently, and we can build content for issues that we're starting to see come through on places like Twitter. From there, we map the key channels, and at this point you may want to brief a team to map any core channels based on your different audience needs, based on what they need from that experience, and based on audience sizing, which you can run on those channels. So you can model which channels your audience are more likely to use. And then we need to understand why people are on those channels, because sometimes on a Facebook, if you hear from your lender, here are 5 top tips to watch out for before you apply, that could feel quite intrusive. That might not be what you want to hear there. So we need to balance why people are on each channel. And that leads us into creating safe spaces. How do we define a purpose for each touch point? Where are our safe spaces? And how do we progress with a search focused strategy to do this? So optimize for what people are searching for. From there, if we improve our service, we will improve our awareness in such a good way. So we might want to assess our customer service, where our strengths and where our weaknesses. And we also want to introduce user experience led thinking, test and learn. And finally, from there, we can look to grow our share of voice. So that's when we might look to develop a press strategy, and we'll look for wider opportunities identified within channel mapping. Following that process step by step, we'll make sure that we're putting our customer first and we're building awareness in a way that's really meaningful. But yeah, the slides will be available off the back of this session, and I hope you found that useful.
Thank you so much, Sam. Brilliant content there. Good to hear directly what customers are talking about in their, their own safe spaces or where they're looking for that kind of information, and lots for providers to take away and think about for their own strategies and the work that they're doing. So we are approaching our last few slides, and we have a couple of questions coming in. So just a reminder, if you have questions, to put them in the live event Q&A, and we'll pick those up. I just wanted to share some kind of final considerations. So Sam shared, lots there for providers to think about. But based on some of the other things we are, that we've heard from Neil and from speaking to providers in this space, there really is space for a multi-channel approach here, and thinking about how these customers maybe are the same or how they differ from your existing book, and therefore what you'd need to change to serve them. So how do you get to know more about these impacted customers? Things, sessions like this, interviews, kind of other research, thinking about where those customers are likely to be, where they're looking for information, if your existing propositions are attractive for these customers, and of course, how you're going to measure performance through any new activity that you're going to undertake to see whether that's working and what you need to do in future. What we've heard from providers who have taken action following market exits is a lot of it is in the kind of third-party engagement space. So providers have been thinking about where customers are going to be looking for information, or where these customers are based, and they're engaging with the kind of social housing providers, with councils, with anywhere else that customers are turning to locally. I think my question here would be about your direct-to-customer material, and to Sam's point, making sure that the content is appropriate for the kind of questions that customers are asking and the kind of questions that customers are going to have as they are kind of seeking access to credit, and really thinking about that customer material so it's most effective. And when you'll be doing that activity, so to Neil's point, Christmas to Christmas, summer to summer, how are you building in plans for kind of the next 12 months to really reach customers when they need it? For your kind of existing marketing strategies, which distribution channels are you making prominent? I think we see a lot of kind of content and marketing that focuses on promoting our most recent channels, whether that's come to the app, come to the live chat, come to the website. While that's good for a lot of customers, making sure you're still promoting some of the more traditional channels, particularly for home collected customers. What other content you're putting out there, if you're referencing exiting lenders, so are you mentioning Provident or Perfect Home in those comms as a kind of a reference point for customers to understand what you might be able to offer to them? And if you do have any capability for multivariate, or sometimes known as A/B testing, so you can kind of test different approaches against each other to see what's the best fit for customers. And offline marketing tactics as well, although it's easy to put home collected customers into a box of being kind of not digital, they kind of are more likely to use a range of marketing channels and tactics. So if you've got your digital on one side, how else are you reaching customers? Is that door drop strategies? Is it kind of the local free magazine that most towns and cities have, or other routes? Again, local PR and thought leadership. I'm a big believer that a well-written press release to your local newspaper that really talks about customer needs and customer benefits can often get a lot of coverage, and it's kind of a free route to getting awareness in your local area. So something to think about. And on the digital side, this is going to be different for every provider. Some of you will have digital marketing agencies already, or teams in-house who have got some expertise in digital. but to a lot of the points that Sam's raised, thinking about your journey and how you make your web pages and your journey really specific to help reach these customers. If you're doing paid search or you have an agency that's doing paid search, looking at those keyword trends, thinking about what you should be doing to respond to what customers are searching for, including the costs. I know that can be a costly space to compete, so thinking about how niche you want to be and how you reach the right customers. If it's your kind of content and search engine optimization, thinking about the product positioning, the blogs, the headlines, the subjects, all the things that will get you in those higher ranking positions on the search engines. Paid social, we know Facebook's a very popular place for all sorts of customers, so do you extend your targeting based on kind of any changes in understanding of home collected customers? And also digital listening at a local level, but although it's it can be very easy to lose quite a lot of time in forums and getting deep into things, you might find the local places where customers are kind of asking for information, asking for help, and find places where it's worth spending some time responding to those customer queries to boost awareness locally. And finally, of course, as you'd expect, just thinking about how you're going to measure the impact of any activity and how long you're going to do it for. So if you are specifically responding to a market exit or any changes in the market, how do you build that into kind of the next 6 months, 12 months, 18 months to 2 years of activity, and working out which of those changes really work for you and building them into your longer term strategy. Now, I think that takes us to a good 9 minutes for Q&A. This is a lot to think about. The reason we kind of phrased a lot of them as questions is because different things will work for different providers with different strategies and different goals that they're trying to reach. So I think it's maybe a good chance to take away what you think will work for you. Working with your marketing teams, working with any marketing agencies that you work with, or indeed coming back to us either now in the Q&A or after this session if you want to have a further discussion about marketing strategies and how this kind of customer insights work might be able to help you. So while the Q&A is coming in, we did have a question from Alan at Hull and East Yorkshire, Hay Credit Union, which I'm going to pass over to Neil to take. So Neil, this is about particularly about Provident and market exits. How do we know that credit unions and CDFIs will not be the next to close? Which I would read between the lines and say, how do we know we won't be next in terms of things like affordability and claims management?
Okay, thanks, Alan. I think there's two parts to that. There's a kind of part on one side which says, is there a pressure that is rising on credit unions per se as a result largely of last year of rising saving book and reducing loan book and the pressures on ratios and the pressure on provisioning? Does that lead to potential merger or closure? And the answer, of course, to that might be yes. In terms of the other aspect of that question, which might be in relation to claims management companies, as they can't go after Provident anymore, and Provident represented about 16% of all banking and credit complaints to the Financial Ombudsman Service in the second half of last year, over 10,000 complaints in the half. And I think, as I was saying in the presentation, I don't see any reason why they won't turn to Morses. I don't see why they won't. Morses numbers have gone from 57 to 224 to 794 in the last three halves to FOS. So I don't see why that wouldn't happen. Why would they turn on the credit union movement or on the CDFI sector? I think there's maybe two things there. One is, I'm not sure the volume is there for them, let alone I'm not sure that the poor lending practice that they are chasing after is there for them. It's possible there is some poor lending practice, but the volume might not be there for them. I know of one lender at least who has received contact with claims management companies and actually spoke to them, actually phoned them up, and this lender is on the call, but they phoned them up, they explained who they were, and you're not going to get much out of us, and actually that was withdrawn, and I know that has happened. So I'd be there's a danger, of course, that claims management companies will just lump every non-priority date lender into the same bucket. But I would say speak to them, and I would think it's unlikely that they will come because of volume. But one other thing to remember, it's not much consolation. If they do come, the first 25 claims that reach the financial ombudsman are free. It's only after you reach 25 that it costs you £750 a pop. So hopefully, Alan, that covers both of those.
Great, thanks so much, Neil. I'm just looking through the question list. There's one around paid search advertising for small loans. This is from Emma. Thanks for your question. So paid search advertising for small loans, even though we aren't a payday lender, is constantly rejected by Google and Facebook. What do you suggest? I probably suggest that it'd be good to have a conversation and learn a bit more about that. I've heard a few times around Google, Facebook and Apple making kind of blanket policies around lenders and based on APR rates. And we know that's going to be a challenge for providers in this space, and we are keen to understand it more and where we can have conversations with whether it's Google, Facebook, whoever, about tackling that and thinking about that a bit more. So apologies, that's not a helpful answer at this stage. I would say let's have a chat about it, and maybe there's broader things we can do that don't focus so much on the small loan messaging, but are there other things you can bring through in that content and that creative that is a better fit for their current policies and that's still appealing to the customers in that audience? But yeah, thanks, that's useful info and one to have a chat about. Neil, I'm going to pass a question to you. There's a great question from Paul. So this question is, it says, home credit agents often said the only reason they could lend to most of their customers was that they went to the door to collect the repayment. If they didn't go to collect the repayment, customer would not pay. What do we think of that? Is it true? What challenges does that present social lenders? I think you touched on it a little bit with how the home collected works, but how do you see that moving over into kind of non-home collected and whether that works for lenders?
It's clearly true to an extent. It clearly helps, when you turn up at the door, although, as I said, the customer doesn't need to answer the door. But they certainly had an experience at Provident when their impairment charge went through the roof, and that was as a result of chaos in terms of getting to the door. So there is some truth in it. There is also truth that in broad terms, 75–80% of customers were paying on time, were repaying loans. So that was it didn't hold completely true. I think there's an issue for one of the issues that community finance is offering an alternative is saying, we don't come to your door, but how can we be as flexible? How can we offer the same levels of flexibility that they offered in terms of missed payments or payment holidays? How can we set up something that's appropriate for you in terms of digital repayment? But clearly, the more the turning up at someone's door clearly helped. But it wasn't the be-all and end-all. I think there are community lenders have got both credit unions and CDFIs have shown over the years that they are able to lend sight unseen in many cases and have an impairment rate, a collection rate that works for them, even though they don't go to the door.
Great, thanks so much, Neil. And then once, Sam, I think we in the interest of time, we didn't get a chance to kind of cover off what digital listening includes. So would you mind just giving us a very quick overview on the digital listening process and how it helps?
Yeah, so digital listening involves scraping hundreds of thousands of different websites to understand what the common themes are, what's being spoken about. So at a very high level, news websites, social media websites, forums, review websites. And when we pull that all in bulk, we're able to start categorizing it and identifying themes. We can look at things such as whether people are speaking positively or negatively. And it's kind of, you can treat it as quantitative research. So if you want to look at sentiment towards your brand or product, you could take 30,000 mentions and look at that sentiment. However, if you want to treat it as qualitative research, you can do exactly that too. So sometimes going through a forum and really listening and understanding how people are asking for help is just as valuable as looking at thousands and thousands of data points. So yeah, hopefully that answers the question.
Great, thanks, Sam. I think we are at our 12 o'clock mark, and you thought this session would go very quickly. I just wanted to just say a quick, well, not a quick, but a big thank you both to Neil for the excellent insights on home collector credit and the customers, and Sam for the digital listening piece and kind of bringing that live customer sentiment to the front, which is really helpful. This is our first customer insights webinar. We want to run more of these. We want to run them on topics that are of interest to people. We want to make sure that they're run in a way that you find helpful. So please, let us know any questions, thoughts, or ideas, about anything we've covered today, or anything you'd maybe like us to cover in the future. You can email our team mailbox, which is hello@fair4allfinance.org.uk, or our email addresses are our first name. So I'm Lauren @ Neil is Neil @ etc. If you want to drop us a line specifically. Thanks all for sharing some time on a Friday morning with us. I hope you have a lovely Friday afternoon and a wonderful weekend. And we'll make this recording available publicly to share with others in your teams, and then look forward to speaking with you again soon. Thanks so much, everybody.